So we come to the final trading day in the month of September. Welcome everyone to the show. Frontier Opening Bell. I am boasting Omofaye, the 30th of September. It's good to welcome Ayode Jebo, who is an investment professional. Thank you, Ayode, for coming on the show this morning.
Thank you for having me.
Onyeka Ejoma is from Vetiva Capital Management. Onyeka, thank you very much, in charge of industrial goods analysis. Morning, Ejoma.
Morning, Boston. Pleasure to be here.
And of course, Ali Kansacho, the CEO and founder at Rich Frontiers Management in Nairobi, Kenya. Thank you so much, Ali.
Thank you, Boston.
Great to have you, gentlemen. It's good to have you on the show today. Let's hit the ground running. Of course, the markets yesterday in Africa were largely mixed. Nigeria continued on that growth trajectory that we saw since last Tuesday's monetary policy decision making to cut interest rates by 100 basis points. The banks continued to pull most of the volumes over the last couple of sessions, and yesterday was not an exception. The Ivorian market softened just about 0.01%, just at a flat line at 125.56. Egyptian stock market 0.16% on the day Egypt made history as the first country to do dollar-denominated green bond on the African continent, $750 million US. Kenya was down 0.06%, and South Africa GSE was soft by 0.39%. South Africa yesterday released its unemployment data, 2.2 million job loss in the period under review, and the black South Africans were the most affected. Let's go to the East African coast, where the central bank in Kenya retained monetary policy rate at 7% on Tuesday. The country's current account deficit steadies at 4.7% of GDP in the month of August. Tuskys, the supermarket or retailer, says two of the shareholders have shunned the $2 billion shillings deal, and they want to get out of the company. And then US is firing Nairobi or Kenya, says stop currency manipulation or forget trade deal. Ethiopia reported 122 billion birr revenue in the full year of 2020. And in terms of corporate earnings from Malawi, National Investment Trust reported 364. Kwaza's profit after tax at first half of the year. Ali, let's chat to the monetary policy decisions of yesterday.
So I think everyone was expecting an unchanged decision. They've guided rates lower so far in 2020. My personal view is that they're running out of road on this rate cutting cycle, and we're within a maximum of 50 basis points of the low. The accompanying statement that was issued by the Monetary Policy Committee was very interesting, and let me give you some salient points. They said 89% of hotels are now open compared to 35% in May. We've spoken about tourism before. This has taken a very, very big hit, not only in Kenya, but across all these sort of tourism destinations in Africa, as we know, and it's been a very, very painful. My personal view is that recovery is not going to happen at all this year, and the question is, when do you see it recovering next year? Globally, I think people are still very nervous around travel, as we discussed yesterday, and it's all about behavioral economics. And maybe it really takes a vaccine before you get tourism back to where it was, but that we'll discover on this journey. Export of goods plus 0.8% in January to August 2020 versus the same period in 2019, which is frankly an outstanding outcome when I think about it. And that speaks to the resilience of the agri-economy, which I think has been outperforming horticulture, agricultural produce, and the like, notwithstanding poor prices for tea. Remittances, this is a standout, up 6.68% year to date. Look, everyone was predicting a drop of between 10 to 30%, World Bank, IMF, so that really has been a pillar of strength. But service exports fell sharply, minus 22.45%. So that's taken a big hit. Bank NPL ratio up to 13.6% in August from 13.15 in June. And this is an area of concern going forward, whether the banks have provisioned sufficiently and whether they've provisioned given the length of time before the recovery starts to play out. So I think, you know, overall, I would say most of us would say that was a pretty reasonable outcome given the circumstances that we found ourselves in. Just touching on the shilling, this has been a report which we talked about yesterday, Business Daily, saying that the Americans, you know, were warning Kenya not to manipulate the shilling. Look, in Kenya's case, the argument by the IMF and other multilateral institutions is that Kenya has been manipulating the currency higher. And normally, the United States does not complain about currencies which are being manipulated higher. They complain about currencies which are being kept artificially low. So I think it's a lot of noise. And my takeaway is that really it's a storm in a teacup. But the issue of the shilling remains out there. And, you know, there's this whole debate as to whether this level of 108.50 is a correct reflection of the market level. And that keeps popping up in the media quite correctly. Tuskys, one of our big supermarket chains, Bison, in very big trouble. Competition has come and it's been fierce, mostly Carrefour. They've come and really swallowed up all the Nakumatt assets and have proved to be very fierce competitors. Naivas, which is an indigenous brand, has also done very well. They took some money from some French private equity. And I think Tuskys has been caught in the crossfire. Finally, Ethiopia, 122.14 bear revenue in full year 2020. Not bad, but the problem in Ethiopia is the differential between the exports and the imports. The exports are considerably lower than the imports at the moment.
Interesting wrap there for the East African markets and economies. Again, the MPC decisions and the GDP expected out of Kenya numbers very big to watch for this very important economy within that region. When we move to the West Coast, where you have Nigeria and the rest of West Africa, two main stories actually stood out overnight. That's the PNID court case. Nigeria is smiling right now, $200 million guarantee, which the court has lifted and says the country should get its money back in the case against this company, which Nigeria is challenging as fraudulent, the gas deal. So the central bank and others seem to be having a party overnight on that. Meantime, two banks have entered the holdco structure phase, getting approval in principle. Sterling Bank, then Access Bank, within the last 72 hours. So that's the big story there. Ghana is getting additional $125 million funding from the World Bank, and Senegal, a bit farther down the West Coast, reporting budget deficit widening to 1.035 billion CFA franc between January and July. Adedeji, let's get first into the banking sector story with the holdco structure.
Yes, I think this is an interesting trend that we're seeing, and it's this is just like reinventing the wheel. We all recall after the major bank consolidation in 2005, and a lot of the banks adopted universal banking model, where they were able to operate a lot of subsidiaries, even non-financial subsidiaries. Some of them had property company, even had finance. So I feel this is also trying to reinvent the wheel. But what it also does, when you are trying to also reinvent, is people we expect that the banks would have also learned from the error of the past. We don't think they will go to that long. They will go through that long haul of even having like a stockbroking firm, and we feel that the focus, I feel they are saying now, is how can they retain the value within the group. So for Access Bank that acquired Diamond, and now they have maybe close to, for instance, I can't recall perfectly, like 10 million customers. They can, whichever business that they're building now, we'll see that synergy, but they can push those products, because we feel that banking is also needs to move to the next level, that value adding. For some of them, I feel they will all want to have like the asset management division where they can create products that will create more value rather than just having your savings accounts products. So if I'm a company that already has 10 million customers, the premium that is always what you call maybe goodwill that will be placed on when you're valuing such a company. So if I have access to 10 million customers and I'm setting up a PFA, for instance, I'm setting up an insurance company, for instance, and health insurance HMO company, for instance, or asset management, I can be able to push these products directly to them, and I'm also creating value. And there would also be reduction in transaction costs. So rather than me going to invest with a different asset management company, the transfer cost or the ability to even get back my proceeds, all those would be limited. And if we look at Stanbic, for instance, that started as an investment bank, part of what has been helping them stabilize is their non-bank subsidiaries, especially the PFA and the asset management. And we feel that even for the banks themselves, with some of these very stringent policies, or I'll put this recent policy of the CBN on the CRR on loan to deposit, they can be able to see how they can synergize with their direct companies such that they also retain value, and at the end of the day, diversify their income base. So I feel won't be surprised to see all the top banks go this route, because that flexibility is there. So even if they are not going to acquire or set up new or have similar subsidiaries, having that license, once you see that there's a business, you follow the money, you set up that business, you retain that value, and that is going to also be positive for shareholders.
Yes, it looks like the banks are following. I guess the banks are looking at the raft of policy, unorthodox policy of the central bank. And to all indications, to all intents and purposes, it looks like the central bank is not backing down from these unconventional policies, at least not in the next couple of years down the line. So perhaps the banks think, look, this is the best way to just get on with the regulator and find the money as the market and the economy is being reshaped one way or the other. I guess that's what's going on. But again, it's still early days when we see how things pace out on this in this price. Thank you so much, Ayodeji. Onyeka, very quickly, what's the take on the streets about this PNID, $200 million extra money for the central bank? It looks like some folks most likely slept better yesterday with this money indicated.
Thank you, Marcel. I don't know if it's the take on the streets, but it's definitely a positive development for Nigeria. It does seem like, and it seemed for a while, that the PNID case is basically falling apart. We know that early on, when the story started to gain traction, the CBN went, full on offensive mode, where they put out they sent a lot of evidence to the Bloomberg news team that published the story on the PNID sham, and I think it's beginning to gain a lot of traction worldwide, that this story, that there might be a lot more to the PNID story than was initially broadcast. And it does seem like the federal government is coming with their receipts. It seems like they're coming with all the evidence, and this the reversal of the $200 million guarantee payment is just another positive, step for the Nigerian government. How it will play out, we still don't know. It's still sort of up in the air, but things seem to be going Nigeria's way, which just begs the question, why didn't Nigeria put an end to this early on? Why did we allow this drag, on for so long if we had this level of evidence that seems to support our claims? But the battle is not far is far from over. We know that these guys, there's a particular hedge fund, I seem to forget the name, that is backing P&ID at the moment, that have a history of doing this, with some level of success in the past. So we know that they will come, with everything that they have, but this is still a positive development. But also, just to touch on the banking story, because I think it's a pretty interesting story, like, if I may. I also see the holdco play from the Nigerian banks as particularly pushing for a Pan-African story. It's also a Pan-African play from the Nigerian banks. We've seen over the past 1 year or 2 years, we've seen a lot of Pan-African investments push from Access Bank, from GT Bank, and the likes, and we feel like I feel like these banks are trying to consolidate their Pan-African position, strengthen their position in the African, at least the sub-Saharan African space. We know that Access Bank is trying to along with Atlas Mara, invest in ABC Bank in Mozambique, and then along with Grow Capital, launch a majority stake acquisition of Grow Bank in South Africa, and it seems to conspicuously be coming on the heels of the AFCFTA. Which is very interesting, because there's a lot of ado about the AFCFTA pushing goods across the continent, but it also has an impact on services. And there is a school of thought that for Nigeria, especially, even while we're trying to improve our infrastructure so we can benefit from the transfer of goods across the continent, especially across West Africa, we are in a better position to benefit from an increased transfer of services across the continent. That's where we seem to have a comparative advantage, whether it's financial services, whether it's entertainment, whether it's technology services. We seem to have that advantage.
Oh, good one. It looks like one big story that's been on the street since yesterday, and everyone, the day before yesterday, I saw it, and everyone is lapping up to that story, the Pan-African footprint and expansion of some of the Nigerian banks. Let's touch on very quickly on Southern Africa with the unemployment numbers around 2.2 million people. South Africa is also eyeing green bonds to fund infrastructure. That's a huge amount of money, 2.3 trillion rand. How President Ramaphosa will get this done remains to be seen. AngloGold is announced pricing of his $700 million bond. But gold is rallying so well. So why would AngloGold need additional $700 million in bond offering? In Zimbabwe, First Mutual posted a profit. That's 2.3 billion Zimbabwean dollars in the first half of the year. But that's good. And Zambia is getting deeper into this debt morass. Fitch rating cuts the country's long-term FX IDR to C class. Ali.
Yes, so obviously the South African jobs number was something that we all had expected, but to see it on the ticker, 2.2 million jobs in the second quarter is pretty stark. There was an interesting argument going on in the sense that the South African authorities recalculated the pool of available workers, and somehow have said that a bunch of people have gone out of that pool. So there was quite an interesting debate on South African media about the way some of the South African media were reporting that number in the context of the real story. Green bonds, obviously, de rigueur and flavor of the month after Egypt sold $750 million, top of the range in terms of size, and at a good rate, 5.25%. And you know, this is tapping into an investment theme in the markets. But as you said, 2.3 trillion rand is a huge amount of money at a time when most of the domestic institutions are already heavily overweight South African bonds, as they support the South African bond market because international investors have been divesting. AngloGold announces a pricing of 700 million bond offering. I'm sure that will be sell like hotcakes. I imagine they're looking for some acquisition money, probably looking to maybe buy up cheap assets, and this is a cheap way of getting money. Interest rates are so low, dollar rates are very low, and I think, you know, given the gold theme, when we've had such a good gold story, they're going to get some cheap money in there. Let me finish off with Fitch. Zambia Eurobonds trading below 50 cents, sold off again in the last 24, 36 hours on Fitch's ratings and on an announcement that they were going to restructure the bond portfolio in short order and reach out to the IMF. The market does not believe the authorities in Lusaka anymore, feel that the government is keener on getting a war chest for the election rather than disciplining themselves. So you've got the challenge of the election coming up, and then, you know, austerity tends not to work well at times of elections because, you know, governments in power want to throw a bit of money around in order to get re-elected.
Very interesting how the debt story will go between Zambia and Angola. Some folks are mentioning Chad Republic and a couple of other names across the country. There's a whole lot of risk premium here for the continent. Earlier, we have this conversation with the G20 meeting, whether it takes place in December under the DSSI. That's still a whole conversation out there. But it's been a very turbulent year so far, by the way, for everyone around around the room, for big economies, for smaller ones as well. Looking at South Africa, Nigeria, and others, and Ivory Coast, Ethiopia, and Ghana. So let's get a quick take from Onyeka. When you look at the industrial goods, what's driving the current volume and pricing that we're seeing in Lafarge? Onyeka, we've seen in Lafarge, we've seen in Bois Cement, we've seen a couple of days on Dangote Cement as well. Who is spending money?
I mean, from all indications, it seems like it's domestic investors that are spending this money. We're beginning to see, you know, some foreign investors, you know, take long-term bets here and there, but for the major part, it's been the domestic players, and it's common, you know, the back of two reasons. The first one is that the fixed income yields in the fixed income market right now, especially as available to domestic investors, are not attractive. But we saw that the last PME, there was, rates, the stock rates came in lower than they did in previous auctions. There will be another PME today, and it does seem like the positioning of the central bank, it shows that there might be another, there might be another cut, even as the market has just finished adjusting to the previous cut, and so investors are looking for better options. And then the MPR cut, the easing of the MPR, this came at the right time for domestic investors. So they basically, took that as a sign of, further growth signaling from the CBN, and we've been seeing some, positive impact in the Nigerian equity space. For context, the equity market returns in the equity markets are now just minus 80 something basis points, just down minus 80 something basis points year to date, compared to around negative 23% year to date return sometime in April. It has been consistently returns have been consistently, improving. And if this momentum continues, we might see a positive year-to-date return by the end of the week. Even though this expectation is that this trend should reverse. Then the second thing is that in the industrial goods space has been benefiting from this even more positively, because we've seen that of all the sectors, including the telecommunication sector and the financial services sector, who were not very affected by this, there has been a huge recovery in the industrial goods space, especially from the cement producers. The base expectation was that we would see a very sharp drop in revenues in Q2, and there might be some improvements in Q3 and Q4. But what we saw as a Q2 was that not only were the domestic producers, ready for this, the drop in cement demand was not as significant, and there was a very sharp recovery in May, in June, and it has continued subsequently. And so investors are basically pricing this in, they're sharing this kind of information, and we are seeing these guys benefit even more positively from this.
We can use whatever good news we can get right now on the market street, I know, and in the economy. So if sectors are benefiting from monetary policy, we'll see how that a spillover effect into down the to the bottom of the pyramid. That's what we all hope for, by the way. A final push for the show this morning comes from Egypt, where the sovereign yesterday did a $750 million sovereign green bond at 5.75% at the global debt market. That's the biggest story in that space. And of course, I want Ayodeji to weigh in very quickly on this before I ask Ali to wrap it up for us. Ayodeji, this is the sovereign green bond. Nigeria stepped into this green bond space just about 2 years ago or so.
Yes, it's interesting to see Egypt be able to raise that large amount. But if we also look at their economy, there's most of the foreign investors, based on their policy, they are aligned a lot with some of the recommendations of the IMF early enough, and we could see that they suffered that short-term pain, and now they're reaping that benefit of the flexibility they have in their FX, which provide confidence for foreign investors, compared to Nigeria, that we still have that sort of capital control, and it's unpredictable. So, and for the green bond, which is more focused towards the renewable energy, we know for Egypt is also very strong in that, especially for the wind and solar renewable energy. And we believe that also for Nigeria, we can also benefit from it a lot, based on our need for power. We can also diversify that dependence on the non-renewable energy or fossil fuel. And I believe that's something that we should also focus on. But the downside or the risk for always from our end is always policy driven. So even if they are also able to raise that fund, the projects be able to repay the loan at the non-cost reflective tariff that they will be running. Or when you also look at the project, if we are using most of those bonds also for basic projects that may not be able to earn any major return in the interim. So it will just continue to accumulate the debt without any avenue of us paying back. Egypt is a very good story that I feel Nigeria also needs to learn from on a policy-wise basis and a form of stability. So when you see how the FDI is now, that's the toast of Africa for that, because even South Africa is also still struggling, and you see all road leads to Egypt for investments.
Eligible. Thank you so much. Ali,
Yes,
the
just-
final word.
I was saying, I agree with him completely. I think, you know, there is an enormous opportunity for African governments in this green bond sector. Egypt is showing the way. I think what you've got to do is put what you're going to do with the money on the ticket and make sure it's going into that area. And there's a huge demand for renewable energy across the continent. And we've also seen a collapse in the price of renewable energy. Solar prices today are lower than any prediction that was made 5 or 10 years ago. So I look at it as a bit of a no-brainer, but we've just got to have some joined up thinking. Egypt have shown the way. All we got to do is copy it, I think.
Egypt has shown the way, let everyone else copy it. Again, it's a brand new world as we look at it. Renewable energy. And with what all the AFDB is also doing, trying to light up Africa, is a whole lot more about investing in renewable energy sources across the continent. That's what we're seeing, as it were, north, east, west, and south. Thank you so much, my panelists this morning. Thank you, Onyeka Ijoma from Vertiva Capital. Eddie Jebo, thank you so much for being about the program, part of the program. And of course, Ali, thank you so much. Alekan Sacho from Rich Frontiers Management. Do have a great day, everyone, and see you again tomorrow. 1st of October is an Independence Day in Nigeria tomorrow. We'll get back to everyone on that. Thank you so much. Bye for now.